Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 26th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list. That way you can be notified whenever we post these videos. You'll also find at the bottom of those emails which stocks are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join us at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And just a heads up here as we get started, looks like we came up a little bit short of our 100 like goal here. The last time I did the video on Tuesday, we only managed to get up to 92. So as promised, I'll try to keep it short for you guys here today. Of course, that's a little bit of an inside joke because many of you know I'm a little bit long-winded, but I will do my best to try to keep this presentation at 15 minutes here today, just going over the indices with no trade application examples. So remember, if you want a more long-form video like the 1-hour presentations I generally give you with the trade application examples, you'll want to click like on Twitter to help us get up and over 100 like is oftentimes the case, but today is a rare time. We didn't quite get to that goal. So we'll keep it short here today. Just do a brief review of the overall markets. Let's start our conversation with the heat map here in the S&P 500. As you can see, it was a very nice day. The S&P 500 actually managed to close higher by over 1% here today. Had a lot of corporate news out there. Some of you that follow my Twitter feed is recognizing that this is dividend increase announcement season as well, as we saw a number of dividend increases come out here recently from stocks like Archer Daniels Midland, Air Products. I just tweeted one out here a moment ago about Schwab this afternoon. And then there was a pretty big one here yesterday overnight with Chevron. In fact, Chevron seemingly caught the ire of the White House when they not only announced a dividend increase, but also announced a $75 billion stock repurchase program. And then other stocks like Comcast also announced their dividend increase. So be on the lookout for a lot of those shareholder returns directly to you in the form of higher dividend amounts as things roll along. But as we kind of look at the breakdown of the S&P 500 today, you'll notice that we do have some bright green patches down here where we see the energy sector. And I mentioned Chevron specifically. You'll notice that it was up 4.86% today, and they weren't alone. That positive vibration that came from their dividend increase announcement and the really big stock buyback program also helped Exxon break out to new all-time highs today. Now, Exxon was one of those companies that I mentioned to you on Tuesday that was caught up in the whole crazy, gap up, gap down scenario with the New York Stock Exchange's glitches. And so the candlestick will look a little bit weird, but if you look at like a weekly chart here this week, you'll see it is at all-time highs. If you looked at just a daily chart and eliminated what happened with the glitch on I think it was Tuesday, then today, even on a daily chart basis, would be your all-time high for ExxonMobil. And remember, it was just a few short years ago. Some people thought ExxonMobil was heading for disaster, that they were going to cut their dividend and all these things as the stock was trading down below $30 per share. All of a sudden, you wake up here in 2023, you see it at all-time highs at 117. Things are looking pretty solid for that particular company. You also notice that a lot of the big tech-oriented firms did pretty well here today. You had Alphabet / Google up 2.5%. You had Meta / Facebook up 4%. Remember what we talked about in Tuesday night's video where communication services is surging higher on the sector selector tool. So that kind of fits into that conversation there nicely as well. We did have Microsoft rebounding pretty nicely after yesterday's slight disappointment in their earnings. Today, they jumped higher by 3%. Apple was up 1.5%. Remember, those are the two largest publicly traded companies in the S&P 500. Therefore, they are the most influential as well. So when you have big up days for both Apple and Microsoft, there's a good chance that the stock market is going to have a smile on its face that day as well. Not to be outdone, you'll see over here, Tesla had a huge day. Now, Tesla is only a $500 billion company these days. I use that term loosely, of course. It's still a huge company, but it's no longer in the same conversation as Apple and Microsoft and Alphabet like it used to be. Nonetheless, you had a huge day for Tesla. They did report their earnings yesterday, and the stock market responded very positively to them here today, up about 11%, one of their bigger days in quite some time. So that particular stock has had really exaggerated price movements this year, both on the downside to start the year, but then here more recently been surging back higher. So it's been a pretty wild one, to be sure. Amazon also had a great day, up over 2% here today. Some of the financials like JP Morgan, Bank of America, Morgan Stanley, they all seem to hold up pretty well today as well. In terms of who the losers were here today, I would say that it's the defensive areas once again that were suffering. I mentioned this multiple times already in these presentations this year, but this year has felt tremendously different to me than last year did. Last year, the dividend stocks were all the rage. They were vastly outperforming the rest of the market. This year, it's exactly the opposite. Those old school dividend paying companies like Walmart and Pepsi and Coke and Procter & Gamble, Mondelez and General Mills and Kellogg and Altria, all of those were down today on a day when the market was up over 1%. And so their good graces that they shared with their investors last year are not continuing this following year. Everything is cyclical, though. Remember that. And so things will eventually turn around again. But this should not come as a big surprise to us because, again, remember when we looked at the sector selector tool on Tuesday's presentation, I shared with you then already that for the second straight week, consumer staples were already dead last at that point. So no surprise that they continue to be in the doghouse now, while some of these other more cyclical and exciting areas of the market kind of take over a bit more. You also did see that a lot of the big pharma drug stocks did poorly today, and that's similar conversation with the staples. They did extremely well last year on a relative basis. So far this year, they're really sputtering. So Johnson & Johnson, Merck, Pfizer, Lilly, Bristol Myers, United Healthcare, AbbVie, Amgen, they were all down here today on a big up day for the market. So after hours, by the way, Intel did report their earnings, and so far it looks pretty pathetic. They were down 6 or 7% the last that I checked, so that didn't look so hot. On the flip side, Visa also reported their earnings after hours tonight, and it was up a couple of percent, so we'll see. Today, of course, the big news was GDP numbers. And we did come in a little bit stronger than forecasted, but not so strong that it would suggest that the Fed would be hiking interest rates much more dramatically than the thoughts were previous to today. So in other words, the expectation out of the Fed right now, and remember their interest rate meeting is next week, is that they will raise interest rates 25 basis points, a pretty nice step down from the 75 and 50 basis points hikes that we dealt with last year. So today's GDP number was good, but not too good, right? You kind of wanted it there nicely in the middle, not too hot, not too cold, and I think the market recognized that today and was willing to allow the stock market to rise as a result, because if we're getting towards the end of the rate hikes and all that is left in the tank, so to speak, is 25 basis points here or there, I think the market can kind of see some of the bright spots at the end of the tunnel there and is treating stocks a lot better in 2023 than it did in 2022. Let's go ahead and go over to our charts now, or over to the main part of the platform, I should say. And you can see that from our breadth numbers perspective, we had a really strong day. 360 of the S&P 500 closed higher today, so that's good for about 72% of stocks within that broad index closed in the green. Obviously, that is a very strong advance across a wide variety of sectors and industry groups. It wasn't just as a result of a handful of big companies that did that. That was a huge advance by the whole market. You can also see the volume associated with those moves was also very strong. Advancing volume beat declining volume by the tune of 2-to-1, even a little bit more than that. If you round it up here on the declining volume, call it about 700 million, and if you doubled that to 1.4 billion, that would still be below the 1.7 billion that actually was printed. So we had a little bit better than 2-for-1 advancing volume over declining volume today, and that's another way to sense that the breadth measures were quite strong yet again here today. Let's take a look at our charts now and see what this looks like from kind of a posture perspective, you can see the S&P 500 closed the day higher by 1.1%. The Dow Jones was up by 0.61%. The NASDAQ Composite was up by 1.76%, and the Russell 2000 was up by 0.67%. So the NASDAQ was today's leader. The Dow Jones was today's laggard. And remember, that's oftentimes how these types of days should shake out. The bigger the move, the more exaggerated the movements would be out of the more speculative areas like technology that is so prevalent in the NASDAQ, and it would be harder for the blue chips to keep up with that type of a big move. And that's what we saw today with the Dow Jones underperforming once again. But here's the good news. All four of our charts do have the strongly bullish posture. In other words, the dark green background color is present on all four of these charts right now, telling us that the market forecast does consider all of them to be strongly bullish right now. In fact, some of them might be too strongly bullish. What I mean by that is down below here, you will see that the NASDAQ Composite ended with an overbought cluster signal here today. That happens when the green, the blue, and the red lines on the market forecast all end in the upper reversal zone above 80 on the same day. That happened not only on the NASDAQ Composite today, but it also happened over here on the Russell 2000 as well. Normally you can see the corresponding red dot on the price candle up above, but because the high label is kind of blocking the view, there is a red dot behind there, but it's the high label that shows up first. So that's why we have the dots on both places, so we can see them one way or the other. But both of those bottom charts ended today with overbought cluster signals. Do keep in mind, that doesn't necessarily mean that the market has to immediately abide by that and go the opposite direction. It might just slow down but continue to grind its way higher. The good news on the Russell 2000 is we did hit a new multi-month high today. As you can see, that high label is over today's price candle, and that is the first one. Remember, I mentioned that very thing on Tuesday. I said if there was going to be one of these indices that broke to new multi-month highs, it would likely be the Russell 2000. We can confirm that with the low size factor as well, being one of our leaders from the factor class that I teach on Wednesday mornings. But here you do see that confirmation officially. We are at new multi-month highs here on the Russell 2000, whereas we do have a ways to go on the Dow Jones, on the S&P 500, and on the NASDAQ. However, if we have another big strong day tomorrow, I could envision the NASDAQ and the S&P 500 getting to new highs as soon as tomorrow if it's a big up day. So we shall see. But of course, again, next week is going to be the Fed announcement, so things can change in a hurry under the wrong type of information. But for right now, things are looking pretty good. Let's take a look at the three green arrows chart now. And as you can see here, we do have the green background color on all four of these charts. And what that means on these particular chart setups here is that we do have a three green arrows signal on all four of these charts. So when you're looking at the 30-day moving average, the MACD histogram, and the stochastics, we do have our most recent arrow being green on all three of those, basically saying that there are bullish conditions that exist in those three different indicators. And usually that's a promising sign for further bullish moves going forward, especially if you believe in trends and the idea that higher highs will lead to further higher highs and strength begets more strength. Right now we have a lot of momentum behind this move that we are all witnessing here in real time. Let's take a look now at the 1040 crossover method, and that'll be chart 4C for those of you following along at home. Now remember, this chart is a little bit longer term in length, so these charts are all 3 years in length, and each one of the candles is a weekly candle. So it's not just what's happening over the last 3 months like the other charts we just looked at. So in this case, you can see we still have work to do. We have one of our charts with what we would refer to as a golden cross, meaning that the 10-week moving average is up and over the 40-week moving average, and that's the Dow Jones Industrial Average. All three of the other charts have yet to see that golden cross, but as you can see here with the Russell 2000, that could just be a week or so away. It wouldn't surprise me at all if we get a crossover on the Russell next week, and we might even get it on the S&P 500 next week. So that would be yet another thing to put into the feather in the hat of the bulls out there. Things have gotten quite strong here all of a sudden, and many of these charts are starting to confirm that. All right, my 15 minutes is up. If you like these smaller, shorter, kind of more condensed videos, then continue to not click like on my tweet there. That'll be pinned to the top of my timeline. On the other hand, if you want me to get back on track with the hour-long videos and the trade application examples, then you'll want to take the 5 seconds out of your day to click like for me there on Twitter. If we're up in over 100 likes by the time I'm scheduled to do the video again on Tuesday, I'll be sure to do another full-length video. If we're under 100 likes, then we'll do another one like this one here, where it's just 15 minutes in length, a quick hitter to let you know what was going on in the markets that day. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.